G'day everyone, welcome to this weekend general update for the 15th and 16th of June. We're still in this corrective phase in global markets. It was a fairly volatile week again, pretty typical of what you see this time of year and during a correction. Sharp moves in both ways, day about. There's a real tussle going on between the positive and negative traders, but I'm still seeing nothing at all that has changed my view that this will be a mild and shallow correction. We've just had a week where there was some terrific opportunities in the Australian market. I highlighted most of those last weekend, and the market pretty much played out the way that was expected. So let's have a look at a summary of the action for last week. The S&P ended up down 17 points on the week, but as we'll see from the chart, it was really just bouncing around all over the place, and it's still a little bit unclear yet whether that the low point for this correction has been formed or not. The key level to look at is 1645 on the S&P index. Above that, I think I can confidently say the correction's over. But whilst it remains below that level, it's about 10 points below that level at the moment, then some further downside to 1555 is still possible. I would expect that we're going to see another week or two of this sort of action. It's very typical of June. Once we get into July, that's normally a much more positive month. And on the broader American market, there's really no sign of a change at all in the market. Last week I showed the charts of the new 52-week highs. There's been no change there. The Russell 2000 index not showing any signs of going into a more significant decline. So it's all just pretty much playing out as expected. Just a word of caution, as I mentioned last week, bond markets have really been on the cusp of falling apart. There's been a 30-year bond bull market since the 1980s. It's been on the cusp of falling apart for about 3 years now, but has been held together because of central bank printing. That really looks as though it's into its falling apart stage, if you like. Now, the impact on stocks will depend a bit on how bond markets unravel. I think it's a given that they are. Bond prices are going to fall. If they fall in a fairly orderly fashion, I think it'll actually be pretty positive for stocks, because the money coming out of bond markets has got to go somewhere else. And as long as it's an orderly transition and people don't get scared, then a lot of that money is going to go into the stock market seeking better returns. But if the bond market falls apart in a less orderly fashion, then the impact on stocks is a lot more of an unknown. So we'll just have to wait and see, but it's just something to be aware of. So let's have a look at the S&P index first of all. We've still got this trend channel, is still holding together. It's been directing traffic now for about 7 months, since November, nearly 8 months in fact. As you can see, it's really just been sideways over the last 7 or 8 trading sessions. If it does move below 1600, then I think we're looking at 1555. But equally, a move above the highs of last week, I think will probably signal that we've seen the lows and we're going to be off again, and I would expect we'll probably make a move above 1700 and head on towards the 1800 area. So we'll just have to wait and see how that particular movement plays out. Now, looking at the Australian market, our index rose by 55 points. Thanks very much to a pretty good bounce on Friday, and the leader of the bounce was certainly the banks. I wrote about that last week. I said the banks were down to technical support. They would be due for a bounce, and in fact they bounced very hard on Friday. But when we look at the ASX 200 index, it's unlikely to just shoot straight back up again, and I'll show you why. So you can see here on the index that we've had a very lengthy decline with virtually no bounces at all. We had 3 days here in late May where the index just went sideways, but apart from that, it's been just down constantly for quite a period of time. You can see that the index got significantly oversold. So this bounce that we saw on Friday is pretty normal. But after such a lengthy decline without any bounces at all, it would be incredibly unusual for this to just go straight back up again. So I suspect that we will get some possibly some range trading at best. So we may, if the bottom is in, and certainly it did bounce off this technical support level here on Thursday. So if the bottom is in, I think we might just trade in a range between here and maybe 4,900 or 5,000 possibly. Or depending on what the US market does, of course, another leg to the downside, perhaps down to this 44.64 mark could be a distinct possibility as well. So again, we'll just have to wait and see how that plays out. I'm not expecting significant gains in the next week or so, but I really think there's going to be some very good setups coming into July. But certainly in the selected stocks that I'm predominantly working with, we've already seen some terrific bounces in the last week, so there's certainly some great opportunities there. And one of the features of a corrective phase is that the best stocks are the last ones to fall, and they're also the first ones to start to bounce back out again, and generally they will start to bounce before the market actually reaches a bottom. So we've seen a couple of those last week. I think we're going to see quite a few more in the coming week. So certainly a good opportunity time in our market. Now turning to gold, ended up gaining $8 on the week, but there was really very minimal movement on a day-to-day basis. Gold stocks slipped a little bit on Friday. They continue just to form a base now. It looks very much like they've probably formed their lows. In other commodity areas, copper slipped a little bit down to 320, but look, that's still a pretty reasonable level. And oil has moved up again, almost back to $100. So let's have a look at gold and gold stocks. So we'll start with the gold stocks. And this is the GDX index, and you can see it's really been in a sideways pattern now since about the 17th of April. So it's been quite a long base formation, might continue for a little bit longer yet, but I think the next move in gold stocks is to the upside. So if we turn to gold itself, this is gold on a weekly chart. So you can see there was really very minimal movement last week, and if we look at it on a daily chart, it looks very much the same, hardly any movement there at all. And just looking at the very important spread chart, or the division chart that I look at, which is the GDX index divided by the price of gold, you can see it's also forming a base, but for the first time managed to get above the moving average for the first time in quite some time. So definitely some signs there that that gold stocks are on the improve. Now there's the spot copper chart. Now just looking at the overall strategy, as I said, there's been some outstanding entries in the last week. Just the best stocks on the Australian market that had been overvalued, both fundamentally and technically, for most of the year, which made buying them not particularly attractive. They've finally given way in the last week or 10 days. They've moved back to a position of fundamental value, so they're back below where I would assign fair value, and they've also moved back to some pretty obvious technical support points, and a couple of them have bounced very nicely. Now, you don't get many shots at these sort of stocks. You only get a couple of cracks a year generally where they come back into a good buying opportunity. So if you're ever going to move on these stocks, this is certainly the time of the year to do it, because they're not going to stay down for very long. Now, last week, as I said, with the banks, I indicated that they were due for a bounce. They did that on Friday. They bounced very hard. And I indicated that the most likely outcome is that we'll go into a broad trading range for some period of time. So that's it for this week. I think we've probably got another week or two of a volatile type of action, but certainly setting up for some excellent months ahead. So once again, if you're not a member and you're viewing this video and you would like more information about how to profit from these opportunities in the second 6 months of the year, then please feel free to contact me. That's all for this week. Cheers.